lesson today. So let's go ahead and get going. I just logged in right before the webinar per usual. When you log into your dashboard, you'll see this flashy button. Now, when you click join, what you'll see is kind of this new interface. We'll have a pretty little picture, the title, and then we'll have a couple paragraphs on what we're covering. So of course, today we're covering the stock monitor and how to create custom scans, focusing on implied volatility. You just come here, enter, and you'll get a confirmation email and a reminder when it's time to hop on. So we're also on Twitter. Here we are at IVolLive. Here we post interesting things we see with volatility measures kind of throughout the trading day. So a really cool resource. We're also on Reddit, where you become more active there. We're r/IVolLive, super easy. We come in here and we talk about some of the things we're looking at. And then we are also on YouTube. And on YouTube is where we put not only longer demos, but we've started putting some shorts on YouTube, which are a lot of fun. So what we do is we take a topic and we come in and we just do a quick little snippet on it. And it's like 2 or 3 minutes. You can see we did IVolLive shorts, how to pull up the futures monitor. So I recorded that one earlier this week. And then we have our regular demos too. Everything's separated by this topic and by title. So really good resource. Follow us at IVolLive's YouTube. So that way you'll get notified every time we post a new video. So moving right along, here we are back in IVolLive. We have our friendly concierge welcoming us to the platform. What he's going to do is point you in the right direction, as all good concierges do, by showing you where the key tools are. So we have kind of this vertical tool set here, what I call the IVolLive totem pole. We have our dashboard, which we're in now, account details, which is where you make sure everything's up to date. We have our getting started, which is also a very important link for getting started. So if you're just joined us, this is where you'd want to go. Because this is going to give you all the details on the platform. It's going to show you our top tools. It's going to give you videos for our top tools, et cetera, et cetera. And you can all follow us here on social. We also have our glossary, charts, calculators, and our guides down here in the knowledge base. So it's a very, very cool section we recently updated. Over here, you'll kind of see other ways to access this information. So IVolLive, stock sentiment analyzer, P&L calculator, real-time spread scanner, daily download, and daily updates. So you'll see these kind of mirror each other. But we do have a new tab here we just created for options pricing calculators and probability calculators. So moving right along, you can expand or contract that view, the chevrons, depending on what kind of device you're on. And we are always available at support@ivolatility.com. whether about IVolLive or data or any other question you may have. So once you're in your dashboard, what's cool about the dashboard is it gives you a starting point to come up with some potential trading ideas, right? So over here you have your IVX volatility monitor. This is going to show you a couple things. It's going to show you tickers, from the top traded names. It's going to show what their implied volatility is. The change, right? The percent change. So you could see, for example, NVIDIA is having almost a 2% jump in implied volatility. And it's going to show you the 1-year high low of implied volatility, because that helps you put these numbers in perspective. So we could see, for an example, SPY has traded over the last year with a high of 27 and a low of 11 for implied volatility. So at 19, it's kind of right in the middle. Not too hot, not too cold. A little Goldilocks situation. But this is a really cool place just to get, a couple ideas for heavily traded names and where they are with their implied volatility ranges. Over here, you'll get some tidbits about, the market, what's going on. This goes 24/7, even on the weekends. Really, really cool place to get some ideas. I normally get 1 or 2 under latest news. And then we have our own news and research. So this is what our team is putting out, finding things that they're particularly interested in. And last week, let's see, it was treasury bonds. So here we looked at what was going on with treasury bonds. Interest rates have been very important with the market. So we analyzed what was happening with the TLT, looking at the 20-year bond bonds have gone down, rates have gone up. So very interesting editorial. And then you could use this to then come into IVolLive and potentially create some trades. Speaking of IVolLive, let's go ahead and jump ahead. Our goal today is to really demonstrate what you can do from within this button. You know, I like to think of it like a downhill stream, right? So it's like I come into the dashboard, I see what's going on with the market, I look at any editorial pieces we put out. I could then come to IVolLive. I have my screens and my scans that I run, and then I find my favorite trades. I run those to the calculators. I then double check my theory with a sentiment analyzer. Then I home in on one or two trades that I run through the P&L calc, and then I would take that to my broker and execute the actual trade. So here we are. This is going to be your default view, especially if you did just join us and sign up for IVolLive. It'll default to the stock monitor covering DJX, which is Dow Jones. This is going to be your default view. So you're going to have the symbol, company name, exchange. This is going to be last price. When in doubt, always hover your mouse and your cursor over a column, and you'll be able to see what each name, what each column rather represents. And then you could sort in ascending or descending. So for an example, since today we're very interested in implied volatilities, I could come here, I could find IVX 30, and I could sort that into ascending and descending order. So within the Dow, here's our group. Apple has the highest IVX today and the highest implied volatility change. So this tells us something's going on with Apple. You know, it does announce earnings November 2nd. It goes ex-dividend November 4th. So something's going on here with Apple. Like implied volatility is the way to think of that. It's like a leading indicator that something's happening with the stock, right? And it's worth looking deeper. On the other hand, we can flip this upside down. The lowest implied volatility reading is from Procter & Gamble, nice, boring consumer products company. It has had a bump today, you know, 3.4% higher, but it's still coming from a low base. And then we could come here and say, where is implied volatility deflating? Like, where is it coming out of a stock? And we could see IBM probably just reported earnings or something when you see that big of a drop in implied volatility, which means that options premiums are also deflating as well. So you can kind of toggle between these. HV stands for historical volatility. OV stands for options volume, call options volume, put option volume, options open interest. Pull our little scroll bar here, call option open interest and put option open interest. So this is going to be kind of your default view, but we can customize this like crazy by clicking on that column settings gear icon. Before we do that, I want to show kind of the pre-built scans that are available to you from this tab. So one of the most popular ones is if you click on top stocks by volume, that's going to bring up the top 5 results for the names that are having the most action in their options volume. So Tesla, here we have almost 2 million contracts traded. NVIDIA, half of that, 1 million. Look at that, that's crazy. It's almost 2 to 1 Tesla compared to the runner-up. Google, right in line with NVIDIA, Amazon, and Microsoft bringing out the top 5. For any of these pre-built scans, you can always view the 5 results, 20, the top 50, the top 100, or the top 200, depending on how big you want your universe to be. I like kind of 20. It's not too many, not too few. But this is a very popular scan, right? Because you can toggle where the volume is within a specific group. This is S&P, but we do have a huge universe of coverage. We have all ETFs, all US indices, all US stocks, all USA, which would be stocks, ETFs, and indices. We have Brazil, Canada, we have Germany, the Dow, European stocks, stocks in India, over in Asia, and then, of course, more European stocks, Russell 2000, if you like to trade the smaller names, a default scan for the top 200s by open interest and top 200 by volume, and then TX60 for our friends north of the border, as well as US weeklies, which we've added. So depending on which group you like to scan against, you're able to do so from that drop-down bar within any of these preset scans, and also within this custom button, which I'll show in a bit. So IVX mean versus 20-day historical historical volatility. So we had a question come in on this, like, what is this? What does it represent? So the way to think about this is you have your company here, your exchange, you have your historical volatility 20. So what this measures is what was the actual volatility that was logged over the past 20 trading days, which if you think about it, since the market's closed on weekends, 20 trading days is equivalent to, 1 month of trading. So in this case, Apple's historical volatility clocked in right under 14. Now, on the other hand, when we look ahead, its implied volatility, IVX, is looking at the next 30 days, right? So that includes weekends. So IVX 30 and HV20 is apples to apples. It's 20 trading days for both. But we can see the future is about twice as volatile as the past with Apple, which is interesting. Same thing with Cisco. And that's signaling to us that something is going to happen, right? Either Apple's going to go higher, lower, or Cisco's going to go higher or lower, but there's going to be some kind of action in these names because of this discrepancy here. I like to use 2 as my cutoff line. Every trader is different, but when I'm looking at giant names like Apple, Cisco, or if I was looking here in the S&P 500, let's go ahead and pull that up. I like a cutoff of 2. So here we have CBOE, CBS, PMY, Merck, TJX. And you can see within the S&P, we actually have more targets than we did in the Dow that are over that dividing line of 2. Here's Apple again, which is interesting because Apple shows up at the top of the Dow, right, and that particular index, but it's, kind of number 10 here in the S&P, right? So again, it just really does depend on what index you'd like to analyze, right? So we're back at the Dow. And then if we move along to IVX historical range, the way to think about this is like a 52-week range for a stock, right? So if you come here, you'll have this IVX 30 high low. And what this means is 20.09 was the lowest implied volatility point for Caterpillar over the last 1 year. 37.99 was the highest implied volatility reading for the past year. So right now we're at 36.67 because remember, IVX 30 is current, which means we're in the 98th percentile for implied volatility for this stock. So, a question came up is, well, how do I interpret IVX? Well, IVX in a vacuum, in my opinion, it is hard to interpret. But when you use IVX and compare it with its historical range, and you compare it with IVP, to me, that's kind of like the holy grail, because now I know Caterpillar's trading with an abnormally high implied volatility, which tells me something's happening here, right? Something's happening with Caterpillar, something's happening with McDonald's, IBM, with earnings, Amgen, all the way down. There's Cisco again, and here's Apple. So as I'm looking at these scans, I'm kind of jotting down on my little trader notepad here different names that pop up repeatedly, right? So I've already kind of written down Apple and Cisco because they keep popping up. And then IV rank. So this is very similar to IVP. So basically, the higher this number is, the more significant the IVX reading is, right? So I like to use a cutoff about 90 on IVP and IVR. Anything below 90, if I'm selling options, I'm not interested in, because above 90 means the options premiums are going to be very, very juicy. So if I'm selling those options, I'm going to be able to generate a great premium, whether that's a put, a covered call, or a spread. So this is one of my favorite scans, IVX historical range. IVX change from yesterday. This is measuring where the action is like now, today, as we speak, day over day. And so here within the Dow, we could see Verizon has had, let's flip this upside down. Here we go. We can see Apple. There's our friend Apple again. Microsoft, a lot of these tech names, because they're announcing earnings, they're going ex-dividend. Here's Cisco again, Walmart, Home Depot, Amgen, CVX. And what this is telling us is the absolute points that it's gone up 2.87. So that means it was like the IVX of 28 or so yesterday for Apple. And then the change percentage, right, which we have here, which is about a double-digit jump, which is huge for a stock the size of Apple. So here, there's no hard and fast rule, but I like to see, if I'm looking for action, I like to see 5% or above day over day in the IVX. So those are all preset for you. You don't have to do a thing. All you have to do is figure out which group you want to look at, and then go to the tab and then scan. Back here on the custom tab is where you have a lot of flexibility, because what you can do is we have our preset screens, and then we have the column settings where you can decide what you want to have displayed. So if we come here, right now we're screening for all instruments. So basically this is what's here is the entire Dow with nothing excluded. But let's say we only wanted to look at stocks that had implied volatilities that are breaking out. So what that means is the future trading action is predicted to have more volatility than what the volatility has been in the past, right? In other words, something's happening, whether it's earnings, momentum trading, lawsuits, take your pick, but something's happening. So you could choose your IVX term. 30 is probably the most popular. Again, that's looking a month out. But depending on if you're a short-term, long-term, intermediate-term trader, you can choose what you want to look at. We have as much as 180 days if you're more long-term oriented, but IVX 30 is the most popular. And then we want to know, where is IVX 30 breaking out over what time period, right? The last month, the last 3 months, the last 6 months, the last year. So let's be very picky. Let's say, where are we seeing an explosive move over the past week? Are we seeing anything that's had its implied volatility jump by 20% over the past week? Because if we see something like that in a major index like the Dow, that tells us something's going on with that stock. As we can see, there's nothing that's had that big of a jump over the past week. So now we could say, well, what about the past month? Here we go. So IBM looks like it had a huge surge in implied volatility that's now since kind of come out, like the air is coming out of that balloon. But this had a big jump, right? Because we screened for more than 20% increase in implied volatility. So we have IBM, McDonald's, Caterpillar, Chevron, Home Depot, Walt Disney, Amgen, Cisco, Apple, and Salesforce. So now what we're seeing here is some names populating in our little custom scans with their implied volatility in the same way we saw those names pop up over here with the pre-built scans. So now it's time to create a group so we can start keeping track of all this. All right, and then we can identify our favorite trades. So here's our new group. That's all you have to do. You just click on new group, put in the name, hit save, and we are good to go. 10/26/23. And then what we can do is we can keep that group open. And here's another kind of how-to. If you want to pull up another stock monitor default tab, all you do is, let me click away, click on this plus icon, drop down arrow, and you can see these are the presets that are available to you. So basically it's stock monitor, futures monitor. If you choose futures, like I said, I did a IVolLive short on that, just posted it to our YouTube channel. Charts, which are right here. You can have multiple charts tab, SPX, SPY, VIX, Apple, QQQ, Russell. So these are all TX60. These are all just presets that you can pull up right here as tabs. In our case, we want the stock monitor. So we bring that over here. So this is going to default to that same view, but I can easily go breakout IV. We're looking at a month, and we wanted to see where there was action of more than 20% on the IVX over the past month. So Apple showed up multiple times, Amgen showed up multiple times, Cisco has showed up multiple times in our screens, IBM, and I like McDonald's, who doesn't? So let's hit plus here, go to our group, 10/26/2023, add, and now we should have, boom, there we go. Those are the names that we just added from that custom scan we did here, breaking out implied volatility. So then we could say, well, where do we have the opposite scenario? Where do we have names that have their implied volatility collapsing, right? So that means options are getting cheaper, and that's important, because if you want to be a buyer of options, whether that's a call option or a put option, you want to get in at the lowest possible price. So let's look at collapsing implied volatilities. I just did 50% collapsing IV. Here we go, over the past month. So you can see on some of the volatile names, they'll show up on both of the screens, right? Coca-Cola, I've been monitoring because they just released earnings. JP Morgan, I've been looking at, same thing, earnings. And then Procter & Gamble we saw, right, as being a boring, sleepy, implied volatility on our earlier scam. So just for fun, I can add those to my group. So if we come back here, we'll see those. And then if you want to get rid of anything ever on any of these custom groups, you can go ahead and just click on it and then throw it in the trash can. Now it's removed. Other thing you could do, a nice little hack, is click on that pencil and you could say IV measures. So now I know that this particular tab is the use cases we're looking at different implied volatility measures, right? And then from here, we can customize further, but I just want to go back here real quick and show kind of the preset screens. We could also screen for high call volume over the past 90 days. So we could say, okay, over the last quarter, where have traders been building a giant call volume position, right? And here we go. You can see that we can sort ascending, descending. So this is looking at abnormal call option buying activity. So we have Microsoft, Coke, Verizon, Boeing, and so on. And then we could also say, well, you know, on the other hand, where are the traders loading up on puts? And again, a lot of times you'll see for heavily traded names, they could show up on both screens, calls and puts. So if you like to trade calls, you like to trade puts, you know, this is an interesting way to see where a lot of the action is. If you want to know where there's, for example, the seesaw, right? Like I look at calls and puts like a seesaw. You know, if you want to see where the seesaw is heavy towards calls, you could go highest call to put ratio. So here we go. Call to put ratio. Coke is at the highest. This means that traders are buying 3 times more calls than they are puts on Coke, which is a good bet. I mean, Coke just beat on earnings. There's American Express, Dow, Walt Disney, Boeing. So you can see. And then where it goes below 1, this is where traders are buying more puts than calls, right? As we get down to Cisco and Walmart. So Cisco, you know, seems to be pretty bearish, right? Because its volatility is, you know, going up and people are loading up on put options. Speaking of which, we can flop this high put to call ratio. And here we go, put to call ratio. So if we do boom, highest to lowest, Walmart has the most puts being bought, Visa, Cisco, then Salesforce, 3M, so on and so forth. So these are really, really cool preset scans where you don't have to do anything, just a few mouse clicks, and then you can sort these columns as you see fit. Now I want to go to our custom group and show you the different things that we can do here. So this is going to default to our preset columns, right? So this is everything that was also here on the stock monitor tab. What we can do though is we can add to or take away from this view. And the way we do that is we hit this gear icon. And here's the different columns available to you. Under general, you could do company name, exchange, and quote time. You know, I don't really care what exchange they are. We're looking within the Dow. So you know, these are all big companies. Typically, I don't really care the exchange names. So that's going to free up one of these columns. Stock price. So we could look at what is the price currently, and then we could look at what was the price the previous day. You know, that's kind of important information I like to look at. Implied volatility. So here we're going to get the IVX30. But if we want to know everything there is to know about a certain term, you know, here we can click a check. And that check is going to give us everything. It's going to give us IVX, IVP, IVR, all that juicy stuff that we showed in those other screens. That's what the check mark does. If you have a dash, then the dash will just give you like this, how it was the default. It'll just give you IVX30. But if you have a check, it's going to give you everything related to that term, right? To that period of time. Historical volatility. Let's say, you know, look, the past is in the past. We don't care anymore. We just want to look ahead. What's going to happen over the next 30 days. And then under options, we could see volume and open interest. Again, these are big names. I mean, I don't necessarily care about open interest because I know there's going to be plenty of it. And I don't really care about volume because I could see that here under top stocks by volume. Fundamentals. So we can do industry, market cap, dividend amount, dividend date, dividend frequency, yield, shares outstanding, earnings per share, let's do the price to earnings ratio. Let's see if we can find any cheap names. And then correlations. If you like to trade various correlations, this is where you would pick and analyze how correlated the individual names here are to the market. And then beta, how do they move relative to the market, right? In terms of their underlying volatility. So we could say beta for the next 30 days, correlation for the next 30 days, right? So now we have apples to apples, same term across the board. Now I can hit apply and save as default. And that will make it my default for every tab that I pull up. Or I can just hit apply and it will apply for this one tab. So I hit apply. Here we go. So you can see this is completely changed. We now just have the symbol, the name, the last price, the change day over day, change percentage, close price from the day prior. Here's our implied volatility. Here's our change day over day. As we know, IBM has been decreasing, but we can easily flip that. And we can see where Apple has been increasing. Then we have our IVX30 change percentage, right? Again, where the action is, these two kind of go hand in hand. This is the change since open. Here's our change since open percentage. So that's absolute terms, and this is in percentage terms. Here's our IVP, right? Which is my favorite measure. So this is, I like to toggle here and I'll say, okay, using that IVP, Procter & Gamble is trading at a low, historically low implied volatility, right? Which we already saw from our different scans. This confirms that. On the other hand, anything above 90 is historically high. So McDonald's, Amgen, they're very high. IBM cruising towards that. Cisco, Apple, they're over the 50% dividing line. So they are more volatile than not, right? Over the past 52 weeks. IVR, same thing, right? So we're sorting here. McDonald's, IBM, Amgen are trading on the higher end of their IVR range, whereas Procter & Gamble is not. And then you'll see here, as we come across, this is going to be the previous closing IVX30. All right, so this is going to look at what happened the day before. So previous days IVX change, previous days IVX change in percentage terms. This is going to be the IVX high-low. Again, one of my favorite measures, because this is just like the 52-week range for a stock, but it's a 52-week range for implied volatility. This is giving you the date that happened. Here's our price to earnings ratio. So we could say, okay, well, what's trading at the cheapest PE, and that's Cisco, Amgen, and Coke. And then what's trading, with the highest correlation in the market, the lowest correlation in the market. So Apple has been the most correlated. And then what's trading kind of in lockstep volatility wise in terms of percentage moves in the underlying stock as the S&P moves. And we see that Cisco, Apple, and Amgen with the highest beta. Whereas on the other hand, we have our very own Procter & Gamble with the lowest beta. So this is how we would filter for, you can see it gives us a very granular view of IVX30. Let's say we changed our mind. We wanted to do something a bit more short term. We can get rid of IVX30. We could do our IVX7. And what you'll see now is we get a very, very in-depth granular view of IVX7, right? So this has all the fields available to us for this particular IVX reading, right? Which is, again, looking at 7 days. And then finally, on the other end of the spectrum, if we wanted to do, let's get rid of 7 and let's say, let's do some leaps. Let's try to, play the future here. And you'll see all of that's changed now to the 1,080 days from now, which somehow will fly by. So again, this is how we would create a custom group and then custom columns within that group. I'm gonna go back to IVX30, and then I want to drill down a bit deeper here before we take questions on a couple of these names. So I wanted to show within my IVolLive, I typically go left to right. Like I always kind of play around with some scans. I create a custom group for any given day or any given week. Then I come to my charts, right? And I start looking at my charts. I'm a 50% kind of chart technical analysis guy, and then 50% fundamentals. So we do have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different custom charts you can do. Spot price is exactly what it sounds like. Implied volatility, exactly what it sounds like. You can look at a specific contract if you're very interested in analyzing a contract you've identified. IV index, open interest, historical volatility, term structure, skew, IV premium, and IV difference. So all of these are available to you here. It's a kind of beyond the scope of this webinar, but we do have plenty of charting webinars posted on our YouTube. The next thing I like to do is I like to go to the VIX. I like to see what the VIX is doing, because what's cool about our system is you can get the fear gauge of the fear gauge. Here we see the IVX for the VIX is up on the day. Here we see the options chain for the VIX. The VIX is a European style instrument, so you can only exercise at expiration. But every once in a while, you'll see these interesting discrepancies, right? Because calls are on the left, puts are on the right. The same strike price, 21, with the expiration on 11/1, 6 days from now. So the same strike, look how much more expensive. What I look for is when there's discrepancies, right? So if you go a little out of the money here, so the next strike down, 21, you'll see that calls are a lot pricier than puts. I like to kind of come out a little bit too, maybe like a month, see what the market makers think is going to happen. So if you look at an equivalent strike, you'll see the put options are a bit more expensive here at the money, right? As we look ahead. So it's always very interesting. Kind of the VIX is often a leading indicator of what's going to happen in the market. And what's cool about this is, from this view, we can isolate the implied volatility for the VIX. So we could see the VIX price is in blue, right? It's recently gone higher. This has been a volatile period. As the price went higher, so too did implied volatility. And now the VIX is kind of taking a breather, and so has its implied vol. But what we could do is orange is historical vol, blue is price. Now we've just isolated the implied volatility for the VIX. So this is the fear gauge of the fear gauge, right? Which is super cool. And then we can overlay, some easy momentum indicators like Bollinger Bands and RSI, which I've done before in a different webinar. And this gives us an idea, right? So right now, the IVX of the VIX is kind of in the middle. So there's no clear indication. We're on the 1-month chart. It could break higher, it could break lower. This is pretty unclear. We can go to a 3-month, see what we see, about the same. 6-month, about the same. 1 year. So right now, the VIX isn't really giving us a clear signal with its IVX. So, this is an interesting point in time as we go into a volatile period, which is typically the fall and winter months. Hopefully we get that Santa Claus rally, though. I don't think anybody would complain about that. And then after the VIX, when I try to get a sense of where the market's going to go, which those tea leaves just gave me nothing because it's right in the middle, which is fine. I like to go to SPY, and I like to see what's happening with SPY. We could see IVX is up a bit. Almost always when you see IVX up a bit, you'll see price down a bit, right? So here's implied volatility going up, and stock, the share price, the spot price of SPY going down. From this view, you can also add different fundamentals here in this upper left-hand pane. So you just click on that gear icon and you scroll through, and you can just add the different things that you're interested in, like dividend and IVX change percentage, hit apply, and you can see that those are now a part of those fields. Over here on this chart, if we wanted to kind of read what the chart is telling us, just high level view, here's the spot price. It's kind of been a rocky road, but it's been a road down, right? And we can see that from this peak here, right? It's had some rallies, but it's also more or less been trending in that direction, right? This is spot price in blue. While spot price has been going down, implied volatility is going up, which means options prices have also been going up. So we could do the same thing. We could add couple of simple momentum indicators, try to gauge where the market's going to go. Let's see here. This is the implied volatility for SPY. We could see it's towards the higher end, but it's nothing extreme. Once we get up in these extremes, above the Bollinger Band and above the RSI, then IVX inevitably comes back down. When IVX comes back down, SPY typically goes up, and that's when you've seen these rallies here. So you can see IVX going down, SPY going up. So that inverse relationship is on display. Other thing I've been looking at recently is TLT. The bond market. This is the 20-year Treasury bond ETF. It's been interesting to me because as rates go up, bond prices have gone down. We have this interesting relationship here between the spot price of this bond fund and the implied volatility, which is through the roof for TLT. So again, we could add our little indicators, see if we're at an extreme. Maybe we're at a turning point. Let's see. We see we hit one here, right? We were above, and then it was inevitable that implied vol would go back in. And that's exactly what happened. As implied volatility came down, we had a nice little bear market rally here, but now we've since gone lower, and we're hitting fresh lows here on TLT. So then to do is I kind of scan those things, first when I come into IVolLive, and then I'll go back to my custom group that I've been creating, and I'll typically pull up a few names. So let's say that none of these were here. What I would do is I'd click on the plus icon. Apple, for an example, was there. Boom. That's how you pull that up. I could also come here and I could just click on a name, right? And that'll pull up over here. So those are the different ways to pull it up. While I'm over on this side of the screen, this is our color theme. So you can go night mode, which is kind of a really cool mode, at least in my opinion. And then we could go day mode, which is the default here. But if we come back to Apple, what was interesting to me was when I looked at Apple and Cisco earlier, I came to the 3-month chart. And you see here with Apple, right? Here's this big run up in price here. Let's do orange. Why not? You see this big run up in spot price. Let's go ahead and bulk that up a bit. All right, so we were going up, and then you see this steep drop, right? So we come here. We go back to red. I mean, a steep, kind of like a roller coaster dive here. And then we kind of come up head and shoulders. We don't break to the upside, we break to the downside. So we establish a new low here. And now we have a fresh head and shoulders pattern right here, which I thought was very interesting. So if we kind of draw that, it's kind of our support line. So as we have this new head and shoulders, what's going to be super interesting is if Apple breaks below this line, or if it hits and bounces higher. We can see this is like our 3-month. Here we're at 3 months. This is like our 3-month support line. So implied volatility has been going higher. This is what we saw in our analysis. We saw that IVX was trending up. That is this line here. All right. So we have implied volatility going higher while we have spot price going lower into this head and shoulders pattern. So this will either kind of break down and it will be about the length of the last shoulder, or it will break above and it will typically be about the length of the last shoulder. And so, it's a very interesting time, I think, to look at trading Apple, but also too, if you go to Cisco, let's go here. Here's our fundamentals. Here's our options chain. Come here on our 3-month chart. There we go. Check out Cisco. We've got this interesting kind of head and shoulders playing out here too, right? So we had this happening here. Here's the spot price. And then over here, we have it never quite formed. It kind of went jagged. And now we're back towards this 3-month support line. So basically, the bottom line is big tech is under pressure. Some of the earnings have beaten, but Wall Street can be a very unforgiving beast and say, well, what are you, not what have you done for me lately, but what are you going to do for me in the future, right? It's a forward-looking mechanism. So if it's not impressed with these big tech earnings, you'll see them punish the stock price. When they punish the stock price, then implied volatility goes higher, But if you're looking for opportunities to buy, this is how you could do some interesting analysis, because they could show up on your radar over here with your screens, and then you can pull up the charts and see, wow, these are at, kind of 3-month support lines, both Apple and Cisco. Perhaps they're worth looking at nibbling, right? Especially because both of them are going to go ex-dividend early November. So if you bought the shares, you'd be entitled to the dividend as long as you owned them before the ex-dividend date. I think it's November 4th, I believe, for both. Or you could buy them outright, or you could sell a put, generate the premium. And then if the shares drop to that support level, like here, I would look to sell the put around the long-term support here about like 170. And I want to do it before November because I'd want to own the shares before the ex-dividend date. So I could come here, look at the kind of at the money or one below. I could kind of analyze both and see which put option I'd like more. On this one, I'd be paid about $1.90 per share, so $190 per contract. This would be less money, right? Because it's less likely I'll be put. That's how this works in the options world, risk reward. And so the more likely something's to happen, that the higher the premium, the less likely, the lower the premium. So I'd earn about half the income here selling it, but there's also a lower chance I'll be put. And what's great about this is from this view, you can pull up our time skew. So this is showing us implied volatility here on the vertical axis, maturity on the Y. You can see we have this growing build, right, as we go into earnings, and then which is November 2nd. And there's a steep drop off in implied volatility after earnings. We can isolate to just look at call options, just look at put. But as we could see, they're pretty much married right now. They're moving in lockstep. Other things you could do from this view that I like is you can look at the bid price for this specific strike, which has gone down throughout the day. You can look at the ask price, which has also gone down throughout the day. You can look at the last price, which mirrors kind of the average between the two, right? The bid and the ask. This is splitting the bid and the ask. This is, the implied volatility level. So you could see we kind of had this steep drop around, let's see, right before 10. And then things have since stabilized. And then table, this is really cool because it shows you the bid and the ask for this specific strike. And it shows you the implied volatility level, and it shows you where volume happened in the market. So if you're tracking a stock or a ticker, this is really interesting information to see where actual money is trading hands. So super useful. And then finally, you come to our handy calculator here. This is where the options calculator, which we recently updated, this is where you would come in and you could play market maker, right? You could say, all right, this expires on the 27th. Here's our current implied volatility. But what happens if between now and the end of the week, volatility goes from 31 to 40, for an example, right? And this is going to show you what will happen to the call, what will happen to the put. We could see, here, we would still, we're at, $2 right now, and this would go to $1.88. But the reason why is because we're so close to expiration. So the theta, the time decay, is really, really kicking in. See right here. But you could play around, you could say, well, what happens if we go to 60? You can see, boom, we're over the current price, right? So if implied volatility kind of doubles or triples, right? We're at, excuse me, we'd be looking at a higher premium on the put. So if we sold that put, if we bought the put, we'd be sitting on a profit. If we sold the put, we'd be sitting on a paper loss, right? Because we'd sell it for $2 and it'd be at $2.45 a share. Over here on the call option side of the equation, here they're trading for about 75 cents. So they'd go up about 50% if implied volatility went higher. And that's regardless of what happens with the underlying share price. Typically, if implied volatility goes up that much, it would correspond with a decreasing share price, but it depends, right? This could also be a strong upward move. And what it's saying is that these call options would be worth about 50% more if implied volatility showed that jump. Interest rates, you could play, Federal Reserve Chairman if you so desire. Dividend date, the last one was 8/11. That's how I knew the next one would be sometime in November, right? Every 3 months, quarterly. But you could play with that. You could say, well, what happens if the board raises the dividend when they announce earnings? And it will show you what that would do to the options pricing. Now, probability calculator is what I'm always interested in when I'm looking at kind of the granular level of the trade, because I'm saying, okay, this thing's been beat up, but I do want to own it. I'm willing to maybe sell a put to own it if I'm put at expiration, or buy the shares outright because I want to own them to earn the dividend in early November, right? And so what we do here is I kind of leave all of this as is. It shows me I have 1 day left on the trade. The dividend date, that shows us our volatility, right? So, this is at the money volatility for this at the money option. You could also just change that, and you could say, well, I'm looking a little longer term, or I'm looking at the past, but the money is a fine default to just live here. And then I say, well, what's the likelihood this thing is going to be below 167.50, right? Our strike price, and here's our probability. And then I say, you know, on the other hand, P2 I normally put as a higher price. So I say, what's the odds that it'll be above 170, as an example. So you can see we have a 64% chance we'll be below 167.50. So what this means is there's a 64% chance I'll get put on Friday by selling this. Because if you look at it, our current share price is 166.18. So this premium, this put strike price at the money, yes, it's higher than 165, but it's lower than 167.50. So chances are I'll be put, which is fine if I want to own the shares. And then above price 2, that's very remote, only 14% chance. So even though these are cheap, I could buy them for, you know, 22 bucks. The 170 calls, not worth it, because there's a 86% chance they expire worthless. And there's not a huge probability that will be between these prices. So I wouldn't do a straddle, and I wouldn't do a strangle, right? So this tells me a lot just by keying that in. So then I could say, well, you know, let me drop it down a strike price. What are the odds I'm going to get paid less money, you know, but what are the odds that I'll be put if I sell the 165? And you can see there's only a 35% chance I'll get put by selling the 165. So chances are I'll be able to make, you know, $90 per contract times however many contracts I sell, and I won't be put. So it just depends on, is my goal to be assigned shares or is my goal not, right? And that would determine, you know, which one of these I sell. On the other hand, I'm still not buying call options. Let's do 167.50, which we know, yeah, will come in at 36 because there's a 64% chance we would be put. So there's only a 36% chance we'll be above 167.50. So clearly, for a short-term trade like this, the better odds are by, you know, if I want to own the shares to sell a put, kind of right at the money or right under the money. So once I have that analysis in tow, typically what I'll do, I'll just breeze over this. I'll go to Sentiment Analyzer. I'll click on Stock Sentiment Analysis. Then I'll typically key in, you know, the particular stock that I'm looking at. And I just do that to kind of, you know, double check my thesis. You know, and let's see, Apple, enter, here we go. Strongly bearish, absolutely still. My rankings here are kind of in the middle. I'll kind of skim through this and make sure it kind of goes along with my overall thesis, which in this case, yep, here we are, RSI, chalk and money flow, which just turned bullish actually, which again is good, right? Because if I do get put, if I do own shares, I want to earn the dividend, and then I want to benefit from an uptick in price. And then you'll see here we have a lot of information on the stock here, and then we have correlation here. That way you don't need to have it as extra columns in IVolLive. And we have our most popular historical volatility terms here and our most popular implied volatility terms here. So again, you can kind of customize your columns like I did earlier, and then come here to look at kind of the most popular relevant terms to go along with your trading thesis, right? And that will minimize the number of columns you have in a given view here in IVolLive. And then I'll come down to my P&L calculator, and I will say, okay, great, I've got this trade in mind. You know, it's Apple. It showed up on pretty much all the scans we ran today. So you type in the ticker, you know, for Apple. Well, now we need to see what's our potential profit, and then what's our potential loss, right? And because ultimately that's why we're in this game, is to generate profits. And I like to know what the total profit potential is on the front end, you know, before going into a trade. I also like to know what the potential risk is in an even trade. So let's see if we can get this thing to pop up. Here we go. What were we looking at? We were looking at the expiration for tomorrow. So here we have the at the money, the 167.50. So I clicked on that. This populates behind us. So right now we are, what are we doing? We're selling to open this October 27th put with a 167.50 strike. We're selling one contract for $192. You could play with this. So if your broker gets you better than 192, let's say they get you $2 per share, right? $200 per contract, boom, all of that will update. This gives you the implied volatility for the strike, the delta, the gamma, theta, and vega. Since we're selling this, we're earning the theta. If we would have bought this, we'd be paying for the theta. Here is our P&L, our blue line here at 0. This is our break even. Apple over this share price is good, right? So that's why it's green. We're in the profit. We're in the red if Apple goes below the share price. Here's share price here on the x-axis, right? Here is our table format, right? So with Apple, let's say if it goes to 180, we're at max profit, 166.22 would be put, right? So technically we'd be at, our profit wouldn't be recognized because we'd be assigned shares. And then here's where we start showing a loss. What we can do here is a bunch of different things. We could say, well, what happens if volatility goes up 15% between now and expiration? And all of this will update in real time. You could also come to advanced settings, and you could play around with interest rates. You could play around with dividends as well, if you want to play chairman of both board and Fed. You can also change your thesis. So if you wanted to do really the opposite of what your original intention was, you can invert this. And now we're buying the put. So we're profitable if the share price goes down. You could also do that here, buy and sell. So this is the trade we had in mind. Now what we could do is we could say, well, that was for the at the money, but we want to be put. But if we didn't want to be put, right? If we didn't want to own shares and we wanted to just milk the premium, we could come in here and say, let's go a little bit further down on the strike totem pole to 165. Here's our P&L for the 165. And you can really just kind of play with it, from here. So either one of those trades would be interesting to me, the 165 or the 167.50. And they really came my way because of those scans that we ran here in IVolLive. And so that's how all of those tools come together. I would then take that trade, go to my online broker, enter it, and, rock and roll. So that is kind of the key ways to find and scan for the implied volatility measures within IVolLive. Any questions, we're at support@ivolatility.com. Also, if you're not yet a user, you could just come here and I'll show you. For this webinar, I use the Pro Real-Time here because this has Stock Monitor, which we spent most of our time on. Options chain, which I showed, IVX monitor showed, probability calculator just went through it. Options calculator briefly showed. Contract viewer, that's where we pulled up all those granular views of the time skew and the time and sales report. Charts, sentiment analyzer we just did. Spread scanner we didn't have time to cover today. P&L calc we literally just did. And it comes with an $80 a month credit. So what I could do is, if I was a little unsure, like, should I trade Apple? Should I trade Cisco after a head and shoulders pattern? I could find a similar time in the past because we have up to 5 years worth of data on the charts. And then I could just order that data and I could analyze, like, what if I would have bought a call or bought a put or sold a put or sold a spread after the last time that happened. So you have an $80 a month credit. We have advanced. This is also another, a subscription level that we have. Which just doesn't have the spread scanner, but it has everything else I showed. And then we have basic, which doesn't have the P&L calc, which is probably one of our most popular tools, and it doesn't have the real-time spread scanner. But either way, choose whatever's best for you, and you get 7 days free to kind of play around with the platform. So I'm going to pause now, see if there's any Q&A or chats. I'm still learning the system here, so we'll make sure I don't miss anything, but if I do, it's at support@ivolatility.com. And then this is our this is how you'd go to subscribe for the services. And then finally, let me just get our Twitter. Here's our Twitter. Here's our Reddit. And then we went over our YouTube earlier. So if there are no questions, let's see. If there are no questions, we'll wrap up. I hope everybody enjoyed it. Please let us know your feedback. Write to us at support@ivolatility.com. We want to make sure that these are very useful and value add for you. Again, today we focused on the different ways to find and screen for implied volatility. So it's been Jonathan with IVolLive. Until next time, happy trading.